it's definitely creating some logistical nightmares for people. But
Hi, once again, everybody. Thanks for joining us here on the Comstock channel. I'm Marlon Bowling with you. Well, we're going to be taking a look at the trading week in a wider perspective here, and we'll talk about things grain related and livestock related with Eric Relph of Comstock Investments. And I think we'll turn things around a little bit here, Eric. The key feature, I guess, would have come out Friday after the market closed, and that was the cattle on feed report that came out. A fair amount of anticipation by the cattle industry, and the prices have been flying pretty high. So tell us what the numbers were in that report.
the trade obviously was expecting a bullish report, just judging by the market movement that we've seen of late. And fundamentals have warranted that. We've seen higher cash cattle on the fed cattle cash has been higher for 7 consecutive weeks. And this week was one of the strongest weeks that we've seen. I guess the anticipation was, if we're going to see higher cash, we're seeing higher box beef, we're seeing solid feeder cattle cash. If we get a cattle on feed report that's bullish as well, then we've warranted this move, and we're probably going to see some further upside. So coming in here, we had a bullish expectation. We were looking for a 96% placed and 102.2 marketed. And we did not live up to expectation. We come out with 101% on feed. We were expecting just shy of 100% on feed. So that number was bearish. You're expecting a 96% placement and you get 100% placement. That number's, or 99 and change. That number's bearish. You're expecting a 102 marketing and you get a 96 marketing. That number's extremely bearish. And so this is going to shock the market a little bit. And I can't help but think, especially with the way we've accelerated trade of late, we're going to see some market reaction to this one. Finally, we might see a cattle on feed report actually get traded next week.
So how could we be that far off on the marketing number? That seems kind of odd, doesn't it?
It does. Normally the marketing number's pegged really close. They watch that really tightly. And I honestly was shocked when I saw above 100. I didn't think it would be 96, but I also didn't think it would be above 100. If you look at last year versus this year, we were just moving more cattle because they were 20 pounds lighter per head. And so you're going to see more cattle move so that you can get the tonnage of beef that's necessary to feed the country and supply the export market. And we're not moving the head, and it's based on head. If they did it by weight, we're probably similar. But on a per head basis, it's not even close this year.
So does that actually mean that we have been rebuilding the herd then, if they didn't market as many as we thought?
Good and bad here. We're recording as quickly as we can to get this out to people, and so that's the good part of it. The bad part is I haven't had time to dissect the categories and see what it was on a categorical basis. But that's my guess is we've been retaining some heifers. I've been hearing rumblings of it, but I've not seen any proof in writing. And again, haven't had time to dissect this report to see if that was the case and what led to this. But I've got to think it's weighing in.
Well, I see where when we closed up the trade on livestock on Friday, live cattle were a little lower, not anything outrageous. Feeders were just kind of mixed, and the hogs were higher. Hogs seem to be outperforming everything now here lately. But with that kind of a market move, did that take any of the edge off of the bearishness on that report or not?
No. This was just, today was actually, you could almost feel the position squaring today. You opened higher, so you were getting just a little bit of last minute buying there at the open this morning. Then traded, like in the case of the feeder cattle, you traded as much as $1 or more lower. That had to be profit taking mid morning, work the market down a little bit, but then coming into the end was like, okay, well, we've got a little bit of a break. Maybe we buy this dip in case this report is as bullish as we expect. And that's what makes me think maybe we're going to see some weakness next week, because I think people were buying into the idea that this would be a bullish cattle on feed.
So what did the beef cutouts do today at midday?
Yeah, so higher again today, although we did slough off a little bit this week. We did see the choice cuts back down a little bit, and select was struggling, but still staying around steady. And then today at midday, we're about $1 higher, both select and choice. And that, again, that's been a pretty bright spot for the entire cattle complex and the industry as a whole.
Let's back up a little bit then and take a look at the grain market here. I see a lot of red on the screen here as we wrapped up the week. Was this the expiration of November options on Friday?
November grain options expired today. Yep. And so I think there was some market negativity surrounding that. You still finished higher for the week in both corn and soybeans. Wheat was ugly. I'd like to actually take a quick peek at that if you don't mind. The KC in particular, um, I'll start there and then we can go back to the corn and beans and talk about that a little bit. But you can see here, huge outside day, way lower by the finish, down 15 cents on the close after trading to gains early in the session. So you're just a total breakdown here technically. Now there is stuff that could catch it here in the 561, 555 range. So you could be within 10 or 15 cents of next technical support, but that's a pretty ugly day on the December KC wheat. Chicago fared a little bit better, but it was still an outside day lower. You traded up to a higher high and then closed awfully low. However, it didn't take out the earlier week lows, so it doesn't look quite as bad on the weekly chart as well, like the KC does. So that's not a good look there for the wheat, and that was all being led. I guess this is worth mentioning. Russia is still undercutting the market in the FOB prices that they're offering to their direct buyers, and this was the daily on the Paris milling wheat. And that contract specifically has been leading the entire global trade with regards to futures markets because it is obviously the next door neighbor to Russia as far as markets that trade wheat. And so we're seeing this kind of weakness today. U.S. markets didn't stand a chance, so we see double-digit losses across all three classes here today, anywhere from 12 to 15 cents lower. So really ugly day in the wheat. I think that put a lot of the pressure on the corn as we saw the December trade 6 lower, although, like I said, higher for the week. We started out the week down here, and you can see obviously finished the week up here. So still higher by about a dime for the week versus where we closed last Friday. Not the end of the world, but still an ugly finish to the week. And soybeans a little bit worse after yesterday's trade. Looking at this on the candlestick chart, it looked like we were going to get follow through to the downside. We did that, although still finishing higher for the week because we started the week out clear down here at the bottom of this recent range. So that's, I guess, in a nutshell, how they finished out. And I think maybe one of the biggest impacting factors still is Brazilian weather. And we're looking at that forecast in the 10 to 15 day time frame, and they're looking to have some real big soaking rains moving in. And right now it's been hit or miss, which is perfect, like we've said, for the planting season. And then if they do get those soakers coming in here in a couple of weeks, then things change.
Well, with the harvest reports I've been receiving here in the studio off and on over the past few weeks, everybody seems to think, well, they're pretty happy with what they got. They're at least as good as they expected, maybe a little better in most cases. So we're coming down the downhill stretch here toward home plate on the fall harvest. Now, I guess it's a double-edged sword. That means we're going to be getting toward the end of harvest pressure. On the other hand, that means the pipeline is completely full now too, right?
Yeah, and it is full. We're in a unique spot in the country here, Marlon, where we had those floods, and so our production is way below what we would normally expect to see, well below APH for most producers in this region, in both corn and soybeans. Corn because of the floods and the issues that we had with the ground. Soybeans not only because of that, but also because our weather, it just fell flat on its face. We had the floods in late June, and we had nothing to speak of after July as far as rain, and that's still the case today. We had zero rain in September and October. The last little showers we had in August weren't enough to really help the beans along. So it's been rough around here. Getting up into Minnesota, same situation, all the way over to South Dakota. And I was looking at a national cash bid map that I get through one of our software providers, and other than huge cattle feeding country where I'm from in Southwest Kansas down into the Texas Panhandle, outside of that region of the country, we have the highest cash price in the entire country right here. And this is some of the highest production ground in the entire country. So it's a little abnormal, especially here in the glut of harvest. But because of the lack of production, here we are. I've had producers tell me they freed up what they wanted to store half the crop. So they freed up the bin space to do that. Didn't even fill it up. So around here, it's different. But I'm talking to clients in northern Missouri, central Illinois, all over the place, and they're full up, to your point. And all this while we're struggling with river water levels. It could be interesting, especially once the upper Mississippi closes up.
Yeah, I've heard a lot of stories of corn piled on the ground. at local elevators.
Oh yeah.
And it's not just in one area, it seems to be scattered all over the place, even soybeans being piled on the ground.
Mhm.
Very unusual. And to me, that's just going to keep a lid on the market for an extended time. It's almost like having the old grain reserve. Remember those days?
I think it's a little odd too, especially given that, and we've all heard those stories if we're in this industry, there's piles where you wouldn't normally see them. And, the elevators have been full for weeks. They were getting 1.5 or 2 crops in because everybody was holding on to old crop. And we did see a lot of that. We saw a lot of grain delivery pre-harvest. Well, they didn't even have time to free up any of that space by the time harvest hit, because all of that was hitting the elevators and stuff in late August, early September, and then we go straight into harvest. And obviously, they were doing it for a reason. They needed the room, and so we had in a matter of 3 months, we've had over a crop and a half come into a lot of these commercial facilities, and in a lot of areas a record crop. And so it's definitely creating some logistical nightmares for people. But I think you might remember on Wednesday I asked Joe Camp how harvest was going in his area, and how things were looking, and he said, it's they're getting close, it's winding down and all that, but it hasn't felt like a big harvest. There hasn't been the lines at the elevators. And then about 12 hours after that conversation takes place, I'm texting with a client over in Illinois who says he just went through the ADM facility where he delivers a lot of his grain, and he said there wasn't even anybody. He didn't have to wait. He just drove right in and delivered. He's in an area, he's making 300 bushel corn in a lot of fields, and so it's a little tough to figure, especially when you look at basis, and it's really pretty good considering if we are sitting on a record crop and carrying in a whole bunch of old crop. This basis is surprisingly good.
Well, that leaves a whole bunch of questions in. Yeah, I mean, it's not like it just went into a big black hole somewhere. It had to go somewhere.
And narrowing the calendar spreads and the glut of harvest on a record crop, that doesn't happen. It doesn't. And we saw that. And a lot of people are saying, well, some major commercials probably got on the wrong side of the spreads, and they, got trapped and essentially got squeezed. And maybe that's the case, and maybe that's all it is. Maybe it's just a money flow thing. But there's several little things you could point to make you think, I'm not buying that we're sitting on a record crop or a record carryover or anything like that. And I know there's a lot of producers out there that did that. But man, once the interest rates went up to 7.5%, 8.5%, depending on when you renewed your operating line, you got to think a lot of that grain just went out the door immediately, because it's not worthwhile to sit on it for that kind of interest. And still, that's what we're hearing. So I don't know. There's a lot to scratch your head over.
So has all this made you change your attitude in how aggressive you are at marketing this new crop now?
Not in the case of the beans, at least. I've had several conversations over the last several days, since we started seeing, it looked like, okay, maybe we're going to rally back up out of here and all is well, right? But then you break yesterday from the high, and then you get follow through to the downside today. So yesterday and today, I've had a lot of conversations about what do we need to be doing with the soybeans. And I guess one of the things that I kept coming to, because people are trying to look not only short term, but long term as well. And if Brazil makes the kind of production that they are said to be capable of this year, that's a major problem. Obviously, China would then cancel some of their purchases that they've already made from us. Not to say that we couldn't hold the export level that we're seeing right now, but what we're seeing right now is nowhere near a marketing year worth. So some of those will get canceled. Some other purchases will be made. Things will shuffle around. But ultimately, they're going to buy a lot from Brazil. Brazil has the capacity to facilitate China with all of their soybeans if they don't have any other buyers coming in.
And I do want to remind everybody that you do more detailed commentary in your morning update, and you do a morning video early each morning too. So our folks out there in the audience may want to check that out. You can get a month of that for just $1. It's our premium content, and it's a lot more detailed, a lot more precise. It gets into actual strategies and that sort of thing. And Eric right here is a big part of that. So you might want to check that out too. Sounds like Monday should be very interesting. It's going to be the last trading days or last trading week of the month too.
Yeah, first notice day for November grains coming up on Thursday, and obviously that impacts the soybeans, which could be part of the reason we're seeing the weakness here. We usually do see weakness going into the delivery period as the longs have to get out of the way, or get delivered on. And so that's going to factor in as well. So I'm not real shined up about what we're seeing, at least short term for the soybeans. And then thinking long term, if we do go into an 89-year drought cycle next year, which Dr. Elwin Taylor out of Iowa State has called for, if I've got 1,000 acres and I'm planning on 800 of them being corn, and we haven't got any moisture by April, I'm probably not going to plant so much corn. And if I'm in the heart of the corn belt, what am I going to plant? And then that just compounds the problem. So a lot to sort out, and we need some 45Z guidance in a big way.
Good point. All righty. We'll be following that too. Eric, great to talk with you. Have a good weekend. Eric Relph of Comstock Investments. That'll do it for this episode. Thanks again for tuning in. For producer Brianne Hendrickson, I'm Marlon Bowling, and we'll catch you next time here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.